that the markets will hit a new high within days?
I think it's likely that we will see that new high, but we may see it again and again and again over the course of this year. I'm reminded of last year where we hit Dow 13,000 in February and then hit it again and again and again, up and down, really all the way through December. And that may be the case again this year. It's a very difficult threshold to get through given the backdrop of all the remaining issues coming out of Washington, the overall weak economic backdrop, and now renewed concerns about Europe.
Well, it's funny when you mention Washington because you see what's happening with the stock market and it makes you wonder, does the market care about sequestration?
Well, it seemed like it cared about sequestration maybe a few weeks ago. The defense stocks certainly hit by the impact of less spending for defense. They've pulled back about 10% a few weeks ago. The HMOs, the Medicare HMOs and the hospitals also pulled back a little bit. So it looks like a lot of the direct market impact of sequestration has been felt, but we're just not sure what the economic drag is going to be. It's about a 0.5%, I should say, 0.5% hit to GDP added to the drag from the beginning of this year. We'll see what that means for consumer spending and retailers. Already we've heard some weaker results there. That may continue and soften things up a little bit later this year.
All right, so there are these issues outstanding. There's always something to worry about when you invest. But even if the market goes sideways all year, is the secular bear market over?
I think it could be. I think we're actually getting to the very end of it. And the reason I say that is valuations are nowhere near where they would be if we were at the end of a bull run or about to embark on another decline as we were back in October 2007. We were last at these levels on the Dow. What we're looking at is a price to earnings ratio on trailing earnings of only 14.5 times. Usually when markets get to the end of a bull market, it's 17 or 18 times. That's been true since World War II. So I don't think the bull is over yet. I think this is a year of transition and volatility to what's likely to be brighter skies for investors come next year.